Good morning, traders. It's Monday, January 27th. Taking a look at the charts, we got some big volatility yesterday or today and last night in overnight trading. More or less on Friday afternoon, we exited out of our SP 500 position where the market's starting to show signs that it was on the verge of breaking down in a big way. We've been talking about how we could see a big correction down to the 20-day moving average. Today, equities are set to gap down about 1.5% to 2% depending on the index. You can see the big red bar today. We're tagging this. This is the 20-day moving average. You can see it's a fairly significant area. Major support over here, tagged it again over here, and we are back down to that level. Now, based on short-term cycles, we are getting into an oversold territory. We've got our cycles bottoming out and more or less probably see some type of bounce for a couple sessions going forward here. But overall, the trend should be turning down today or tomorrow, and we've got some pretty big movement going into the safe havens. We're seeing bonds up, metals are up. And of course, we've got big panic selling kicking in the stock market, and that means natural gas. We're finally seeing that kind of panic sell-off in the equities where money moves into natural gas. We're starting to see that pop up 3%. So let's just take a look over at bonds here. Bonds having a nice move up 0.75%. Overall, if the stock market does put in a bounce this week, I think we'd see bonds kind of pause or pull back a little bit. But once the selling continues in the stock market, bonds will continue to push higher. Now, overall, bonds have broken out of this big bull flag that we've got going on here. It has broken to the upside. And now it has broken a significant high here. We've broken several other significant, this is a really significant pivot high here that is popping above today, and of course also this one as well. So we've broken a lot of resistance areas, meaning the upside momentum has shifted clearly to the upside, and it might be a little bit overdone this week. We might start to see it flag out a bit, but overall we're expecting it to continue to work itself higher and take off as the stock market starts to collapse. Now, money's flowing into precious metals as well. Gold up 0.6%. Moving up here. Overall, you can see the cycles here showing we could see some more downward bias in the precious metals sector. More or less the same for gold, silver, and miners. They're testing these highs, and we'll see if we get an extension and a breakout of this rally. And this is where cycle analysis can get a little complicated because if we break through this main resistance area that has been kind of chopping and flagging through here, more or less this cycle analysis becomes negated, and that downward cycle actually turns to an upward cycle, and you get a big expansion and a move to the upside. So breakouts will negate the cycles, and they actually flip directions. So we'll see how things go, but metals and miners are on the verge of this big kind of pop in this breakout. If we look at silver, up 0.9%, it's been flagging sideways as well. Cycle analysis still shows we got another week and a half or so of some sideways or potentially lower pricing. But again, if the market starts to break and money really starts to flow into the safe havens and out of equities, we're going to see these break to the upside. We're going to see a pretty big run. If we look at the monthly chart of silver, you can see the type of price action we've got going on here. If we look at, let's just take a look over at this price action over here. We had congestion, we had a strong move here, and from that area we've got something similar to that kind of building again here. We've gone from a bear market to more or less we've got higher lows set in silver. We're starting to make somewhat of higher highs. We really need to clear this one here to really be significant, but overall it's primed and ready for some type of explosive move to the upside. And last time we saw a setup like this was over here. We saw silver go from more or less 18 or 20 all the way up to like 48, 49 dollars an ounce. So we'll see how things start to play out here, but the metal sector primed and ready for a big pop and a move after a multi-year basing, a bear market and basing formation playing out. Let's take a look over at gold miners real quick. Miners forming this somewhat of a bear flag. We are in an uptrend. The market is trending higher. It had a strong pullback. It's forming this bear flag. It's trying to break itself above these highs and continue higher, but our cycles show that we could still see it pull back a bit. If the stock market bounces this week, being down at the 20-day moving average, and it'll be oversold this morning, if stocks bounce, we could see miners come back down and continue to flag out for a while before they eventually take another run. So we're not in the clear yet, and the equities market is now going to be oversold. In 2 days, it went from overbought to oversold in that support, and the precious metals market is overbought, and it could very easily go back down to an oversold and find a support level somewhere down at these lows, or potentially a little bit lower down and through all these highs and lows down here. Looking over at energies, natural gas up 3.4%. Still trying to carve out a bottom here. Let's just zoom in a little bit more. We're starting to break and flirt more with this 5-day moving average that's coming down. If we can get some follow through today, we could really start to see this pop and move forward. Overall, we're looking for something like this. These are the previous lows that we played. We played this and we got long in here, caught this move. We played this bottoming formation. We got long in here. We caught that move. And now we're looking for something similar where it's trying to carve out a bottom down here. And hopefully we'll see some type of knee-jerk reaction and rally going out of here as well. Looking at crude coming all the way down to that 53, 52 downside target we've been talking about. It is a long-term support zone, a fairly significant level. If we were to just box in these lows down here, carry it across, you can see this is more or less a measured move. If we throw a Fibonacci extension on here, just take a look at the price action. You can see what if we go from this high here. We're not going from the news-based spike high. That's not a true high. Go from this high here down to the low here, and then up to this high here, carry it forward. You can see where price has gone. We've pulled back, we bounced, we got a 100% measured move. We've talked about this for really about a week, that once we saw this reversal bar start to take place, we talked about it. We drew this Fibonacci I think it was last Friday or Monday, whichever day that was. We had this level here down to these previous pivot lows. This will act as a support zone. Our cycles are showing things are going to be oversold. We should start to see an upward bias bounce in oil. So there could be a point here where we start to see a bounce. But take a look at let's just look at the weekly chart of crude. You can see this big pattern here, more or less, big bear market. It's rallied, consolidated here, potentially a downward move. If it breaks these lows here, we've got a pretty big move to the downside. The monthly chart gives you an even a better view. Let's just go to the monthly. And if you look at the monthly chart, and let me just get rid of this. Some of these lines here. More or less, we've had a big sell-off. It's consolidating sideways, and this pattern here, if we break these little candle lows, we're going right back down somewhere towards this 33 level, which is back over here, which is also this pivot low over here. We talked about this somewhere right up in this area. We were talking about how the market has got the momentum that if it does come all the way down and break down, we'll be back down at this area. So overall, this long-term pattern is on the verge of breaking down, and 33, 34 would be the downside target if this starts to break. And things could get pretty ugly. So we'll see how things hold up at support for oil this week. It's oversold. Probably going to see some pretty good volatility in price action, and we'll see how it holds up. But overall, on a weekly basis, if it starts to close below these little wick lows here, then we're going down to this 44, and then we're going down to this 33 and change. Anyways, that's it for this morning. I'll talk to you in a little bit. Bye-bye.